My friends, good evening. Today I come to issue a warning. I would still like to warn you about a number of bad pieces of advice that are circulating online and that can cause you a lot of harm, that can lead you straight to a tax reassessment without you even understanding what hit you. So let me tell you, I'm in the process of making preparations to leave the United Kingdom. It's a very serious project. On the administrative side, things are going well. There's quite a bit of bureaucracy, but that's how it is. So I'm going to leave very soon. I will leave this country for good. Now, in this context, sometimes I do some research. I look for information here and there. Even the YouTube algorithm sometimes suggests videos about people moving abroad or giving advice. And then I see a piece of advice that comes up often, which is honestly dangerous. It's this one. A lot of people advise you to open bank accounts abroad. This can be done through videos, blogs, or other ways, showing you how to protect your savings and money, especially since we're discussing the confiscation of savings. So some people say, I'll open an account in Switzerland, I'll open an account in Hong Kong, in Singapore, wherever, in jurisdictions that are a bit known for their discretion, I'll stash my money there. That's what it's called. People who want to move their savings, help protect it, I understand them. There are also other people who, for example, on 10 Gig Online, for example, they develop, they do things, they have an activity, they have a small business, a small website, they do drop shipping, things like that. They receive money. They say to themselves, well, I'm an employee in France, I work full time, all that. I don't want to move this money through France because then I'll be heavily taxed. So what I do is I send it to another jurisdiction and it will just sit there and accumulate discreetly. I'd like to tell you that there's a very, very big danger in doing that today. Let me tell you. Let's say we're in 2013, just to give an example, or even 2015. Let's go back 10 years. You go to Switzerland, you go to Geneva, you go to Lausanne, you go to Hong Kong. It doesn't matter. You open an account, you open a bank account. So it's an offshore bank account. You create it, well, as we said, to protect your finances. It's completely legitimate. I'm not criticizing the act itself. I'm criticizing what's going to come next. At that time, about 10 years ago, how would the French tax authorities have caught you? Or how would the Belgian tax authorities have caught you? Or the Spanish tax authorities? Or the British tax authorities? How would they have caught you in such a situation? Well, it wasn't simple. They were very limited. The only way for them to find out was to request judicial assistance. You can't request judicial assistance from every country or ask all of them if someone has a bank account. It's too expensive and impractical. They just can't do it. So they would have needed to already have other evidence, like, for example, if they searched your place and found a Swiss bank card, or they found a check stub or something, some papers that would show like he has a bank account in Switzerland. At that point, they would ask the Swiss authorities for help. It took as long as it took, it would get to the bank, and the bank would respond by confirming, saying, yes, this person has an account with us, here is the balance, here are the transactions, here are the interest payments, here. That was 10 years ago. And a lot of people are still in that mindset, thinking that, anyway, let's imagine I go on vacation somewhere. I say, here, I'm going on vacation to Thailand. I land, I have a layover in Singapore, and then just like that, I sneak out of the airport, I go to the bank unnoticed, I open an account, I get back on the plane, if I don't say anything, nobody knows. Okay? This is false. That way of thinking is wrong today. I'll show you something. That thing behind me, AEOI, I encourage you to Google AEOI. What is that thing? It was launched at the initiative of the OECD countries a number of years ago. And today, more and more countries are joining it. Switzerland is in it, for example. What is the AEOI? A is for automatic. Remember the word automatic. Automatic exchange of information. In other words, information is exchanged automatically. What does that mean? Let me give you an example. You live in France, whether it's Paris, Lyon, it doesn't matter where you live. You go to Switzerland. You open a bank account. You have your card, e-banking, and everything you need. You're set. You put your savings in there, all that. Okay. We get to the end of the year. What is the bank going to do? The bank, when you signed up with them, had you fill out some forms. Among the forms, they asked you for proof of residence, proof of address. They probably asked you for tax statements, didn't they? Or even if they didn't ask you for them, as long as they know you're a resident in France because you provided a gas or electricity bill or a copy of the lease or something else, they know where you live. In France, so you are a tax resident in France, what are they going to do at the end of the year? Well, without the need for cooperation, without the need for a case against you, without the need for anything, there is nothing at all. Automatically, the banks of the participating countries will send your account information to the tax authorities. They will send it to the French tax authorities. It's that simple. Every year, they will search their database. They will find all the French people or anyone who is a tax resident in France. Even if you're not French, you could potentially be Tunisian, you could be Argentinian, you could be Italian, it doesn't matter. If you are a tax resident in France, what they will do is export the information. It will contain your last name, first name, address. It will contain your account number, your account balance, the interest you received during the year, and similar information. It can even include transactions and other details. But the minimum I just told you, that's what it is. And let's say, for example, you deposited 50,000 euros at the Cantonal Bank of Geneva or at the Cantonal Bank of the Canton of Vaud or somewhere else. At the BCV, let's say, at the BCV at the end of the year, it's sent to the French tax authorities. Hello, here you go. So-and-so is with us. He has an account. The tax authorities, what they're going to do, they'll say, he has an account in Switzerland. They'll take your tax return, compare it. Did you see that? He didn't say anything there, did he? And that's how you're going to get caught. You see? Hong Kong banks do the same. Banks in Hong Kong do exactly the same. Actually, what happened is that all the European banks, and that includes Swiss banks, of course, the banks from those countries, outside the European Union, many African banks, many Latin banks from Latin America, Canada, Japan too, they all do that. They are all in the system. It's a system that is truly global. Which country isn't in it? So if you open an account in Syria, it's clear that they're not in there for now. Russia, Belarus, they're not in there. I heard that Panama isn't in there either. But be careful, don't take it at face value, because what happens is, for example, Switzerland, I think if I remember correctly, they joined the system in 2017. That means that until 2016, it was calm. You had your money, everything, no worries. As long as the tax authorities didn't suspect you, nobody would come looking for trouble. In 2017, suddenly they take everything and send it to the tax authorities. You see what I mean? So Russia isn't in it. But actually, there are a lot of countries that aren't in it. The United States isn't in it. On the other hand, the United States works with another system. They work with another system that's connected. But I almost want to say that today, if you had an account in the United States wouldn't necessarily, and again, be careful, be careful. Every day, every month, we hear that new countries are joining the system. New countries are joining the system. Morocco is not in it, as far as I know. Algeria is not in it, as far as I know. That means, for example, if we have an Algerian citizen who goes to Algeria, who goes to Algiers or Oran or somewhere else, and he opens an account and deposits money there, normally Algeria will not inform anyone. They will not inform the country where he is a tax resident. It's the same for Morocco. There are still a few countries. There's Pakistan and so on. Syria, as I mentioned. Russia, Belarus. There are a number of countries. Panama, I've heard about, but be careful. What's happening is that the fact that I'm giving you this list doesn't mean these countries are safe. No, they are not safe at all. Because this OECD initiative is really becoming global. Why? Because all the countries are saying, okay, I report the people who deposit money with me. In return, if my citizens, my tax residents are hiding money elsewhere, I also get informed. So actually they benefit from it. That's why regularly countries join in. So even if now you find the AEOI list, you find it, and then finally there's an interesting country for you where you can open a bank account, there's no guarantee that the country won't suddenly join within the next 6 months, especially since there's something else. Countries that don't join the system are increasingly subjected to political pressure. It can go as far as financial sanctions, They are really under pressure. Even countries that don't do it are under very strong pressure to give in and do it. Because if they don't do it, they can find themselves excluded from financial flows, banking systems, payment systems, they can face sanctions and so on. So there you have it. We're seeing a racket that's going global. What can you do? What can you do if you're in a jurisdiction with suffocating taxes? Listen, the truth, the real truth, you can watch lots of videos, read lots of books, websites, all that. But the only reality is that you remove yourself from the jurisdiction of that country. That means leaving that country. That's the real option. It's just to disappear, to get out of there. Don't stay there. The longer you stay, the more you'll finance their shoes, you'll finance their helicopters, you'll finance their expenses, you'll finance the lifestyle of their children, the helicopter that drops the teenager on a ski slope, etc. That's what you'll actually be financing. So get out of there. Leave, leave, don't stay. There you go, my friends. Training, astrology, available on Amazon. And then I also opened up consultations. If you have an immigration project, if you're planning to leave, if you've made a mistake or are about to make one, don't hesitate to book a one-to-one consulting session and we'll talk about it together. Thank you, my friends, and I'll see you in the next video.